Hello, company being analyzed today is KP Energy Limited. This is the company whose stock price has skyrocketed. For example, in April 2023, it was worth around 62 rupees. Then, in 2 years, little more than 2 years, it has exploded to 419.8 rupees. Even after this massive explosion, the current PE, the price to earnings ratio, is around 22.9. This is a 2,803 crores company, so a mid-cap company, and has seen explosive revenue and profit growth. So today, we're going to analyze the company's financials, what it actually does, and its future growth outlooks. So let's begin. First, we have some of its financials. First, let's take a look at revenue from operations in crores. So in fiscal year 2021, it was 71.7 crores and exploded to 250 crores, not even a year later. Fiscal year 2024, 472 crores, and in fiscal year 2025, 938 crores. Massive explosion in revenue. EBITDA has increased from 19.3 crores in fiscal year 2021 to 10x to 196.1 crores in fiscal year 2025. And EBITDA margin is around 20%. So talking about a double digit EBITDA margin company. Then profit after tax exploded from 6.1 crores in fiscal year 2021 to 115.3 crores in fiscal year 2025. The profit after tax margin or net profit margin being double digits for the past three fiscal years. The debt to equity has also increased from 0.31 5 years ago to now 0.73. The company, in order to fund its operations and expansion, is using more and more of debt. So let's see how that works out. Finally, it does have high return on net worth, 37%, and high return on capital employed, 27.1%. Higher these numbers, the better. So let's see how they go moving forward. But these are still pretty solid numbers. Now, what does the company actually do? It's written here. I hope you can see this: wind energy and wind solar hybrid power projects. So, main thing is wind energy projects, wind farms, wind panels, wind turbines, all of that, and a bit of solar. Till date, till date, they have installed a cumulative 1.05 gigawatts of capacity. So till date, they have done 1.05 gigawatts. Whatever money they have made, it is from this 1.05 gigawatts. But currently, the projects that they have in hand, the orders that they right now have, are 2.22 gigawatt. Let's bring some perspective into this. This revenue that we saw, this revenue, okay, this is all the 1 gigawatt that has been installed till now. All of this cumulatively is the 1 gigawatt, and they're currently working with 2.2 gigawatts worth of projects as orders that they've got from clients. So you can see what kind of growth they're dealing with. This 10 gigawatts, ignore this one. It is not for KP Energy. It's for like many other big all KP group. So many different companies. This is the total target. So ignore that one. Important thing, 2.2 gigawatts. Then these states, their presence in, they were UP, Gujarat, Maharashtra, and Karnataka. These are the places they have the presence in. They're looking to expand, I think, in Tamil Nadu is the new place they're looking to expand into. Then the quarter one fiscal year 2026 highlights. These are in millions of dollars. We will focus on these growth percentages. 63% growth in sales, 63% growth in EBITDA, a 40% growth in profits. Okay, profits grew lower. Earnings per share grew by 39%, but cash profit, which is net profit plus depreciation and amortization, grew 60%. So it seemed that this lower profit after tax growth in quarter one fiscal 2026 was due to way higher depreciation and amortization, which is not a cash flow expense. It's an expense, but does not really affect the bank balances of a company. You can see EBITDA also rose by 63%. So growth is keeping up. Profit growth is keeping up with revenue growth. That is the important thing to keep in mind. Moving on, we have this. The future area of growth, the F and the U are missing, but future area of growth is offshore wind projects. So currently on the shore, on land, wind projects are being made, but now potential one is offshore wind project. Okay, there is a 70 gigawatts of offshore wind potential in India. The PLF, plant load factor. What is plant load factor? Plant load factor, you can imagine is total amount of energy being produced by, let's say, a power plant upon upon the total capacity. So amount of electricity or power actually being produced when compared to the total capacity actually there of the power plant. That is not the plant load factor. So onshore wind projects have a 30 to 35% plant load factor of the total capacity. 30 to 35% can be produced at a time. This has 45 to 50%. Then, yes, compared to onshore, minimum land is required for offshore wind, and this 73 gigawatts of offshore wind has already been installed. So there is a precedent. Examples are there in the past that this has been done. More importantly, the government is setting up things. So Gujarat and Tamil Nadu are the two main hotspots, and a viability gap fund, VGF, viability gap fund, government scheme for rupees 7,453 crores has been set up for energizing 1 gigawatt alone. Tenders are being released, bids, offers are being released in Gujarat and Tamil Nadu. Proposals were offered. So government has said that they will start to now look into bidding and all that. Companies can bid. Then we move forward. Here we go. The company, uh, 2010, okay, leading end-to-end wind energy solutions, end to end. So they design the project. We will move into it. Okay, end to end, right? There are three things. The three business models. The B and the U is missing, and the S partially. The three business models. First is EPCC, then we have IPP and O&M. Now this EPC is the main thing. 95% to 96% of the revenue comes from EPCC. What does it do? What is EPCC? Engineering, procurement, construction, commissioning. They design a wind farm, for example. They design a wind farm. KP Energy designs a wind farm, engineering. They procure the material for the wind farm, procurement. They construct the wind farm, and then they commission it, meaning it's working, everything's fine, all of that. Then, after constructing the wind farm, they give it to the client. So that's what they do. EPCC. We will discuss the margins of this project. So 95% of revenue. Then around 3 to 5% of revenue comes from IPP, independent power producers. Maybe wrong definition. I believe it's independent power producers. In this, again, they will make a wind farm. However, they will make the wind farm completed, but they will not give it to a client. They will actually sell power generated to the client. So this is independent power producers. They will just sell power. This has the best margins, way higher margins. For example, if this has 15 to 17% gross margins, this has 65 to 70% gross margins. However, way more capital and money intensive. A lot of money the firm needs to have in order to, actually produce and keep the project. So yeah, last is operation and maintenance. Till now, most of the operations and maintenance fees were actually free for their clients. They didn't charge operation and maintenance costs. Now they have started. So operation and maintenance of the like wind farms to the clients, all of that. So it will also start bringing in revenue. They currently have 48.5 megawatts of IPP. Okay, IPP of 48.5 megawatts. They're planning to expand this to 100 megawatts. So keep that in mind. The growth story. Finally, the con call. These statements highlighted here are said by the management of the company, the CEO, the MD. One of them has said this. Some of them have said this. First, this 2.2 gigawatts of orders that they have on hand roughly constitutes 3,000 plus crores of orders in terms of value. So 3,000 crores, the value of this 2.2 gigawatts. Then, what is the timeline? If you span the project roughly, the average cycle of a project will be somewhere between 12, 18, 24 months, depending on the size of project. So at the maximum 24 months, divide that 3,000, very crude calculation, 1,500 crores at the maximum project timeline. And they're always trying to do it earlier. The portion will be done in 12 months, portion will be done in 18 months, portion will be done in 24 months to 2 years. So you can see. Then let's move forward. Yes. What? Hold up, wrong page, wrong page. It's the wrong page. Yes. EPC contract. Typically, an EPC contract would have gross margins of 15 to 18%. And in that case, the power sale, the IPP power sale, the margins would be around 65 to 75%. Then we are standing at 95% on the EPC segment. So 95% of revenue, Q1 fiscal 26 comes from EPC. The power sale is the IPP segment, 3 to 5%. And O&M, operational maintenance, is around 1%. And finally, we go to here. They have a 3 gigawatt bid pipeline. So they have 2.2 gigawatts of orders on hand, and they're trying to bid. They're currently bidding for 3 gigawatts worth of more projects. So that was it. That was AP Energy Limited. Finally, the company has said that they're aiming for 60% CAGR growth in their earnings for the next few years. 60%. End this segment, we can go here. This is the profit and loss of the company from 2015 all the way to 2025. Compounded sales growth last 10 years has been 43%. And you can see it's not slowing down last 5 years, 66%. Compounded profit growth 44% last 10 years, 153%. Pay attention to one thing: operating profit and interest on loans. Operating profit, you divide it by interest, it gives the interest coverage ratio. This is a very important term because it shows us how easy it is for a company to actually pay interest on loans. For example, in 2018, 10 crores of operating profit, 3 crores is the interest coverage ratio, 3, which is a pretty comfortable interest coverage ratio. So we move forward, and you see in fiscal year 2025, we have 176 crores of operating profit and 29 crores of interest payments. 176 divided by 29, I don't have my calculator, but that sounds around more than 5. Yes, that sounds more than 5. 29 into 6 is around almost that. So 5 to 6 times, 5 point something times is the interest coverage ratio, which is pretty comfortable. Interest has risen, but so have the operating profits. So that was it. That was KP Energy Limited.